Here is the overview you are looking for. First question that the lender is going to ask you, is your business model sound? Talk to me, boss, about this. See, the thing is, you are looking for a startup loan, no revenue, no personal guarantee, and a big amount. The lender wants to make sure that your business, that is, will be around, say, 3, 4, or 5 years from now. See, when you think about the stats for startups in this country, you have 3/4 of startups that actually file for bankruptcy or close shop within the first 2 to 3 years. So the stats are really they're really against you here, boss. So the thing is, if you want to improve your chances of getting a startup business loan, no revenue, no personal guarantee, and a big amount, you have to prove to the lender that your business model is sound. So how do you do that? Talk to me. How do you do that? You actually do this through something called a business plan. So you got to have a captivating, sound business plan to explain to the lender, to articulate to the lender that, hey, listen, my business model is actually sound. My business model is viable. 5 years from now, I'll be around. 2 years from now, I'll be around. So how do you actually, in detail? You have to go granular here. Detail is the name of the game. So when we talk about a business plan, there are 6 important parts of that document. We're talking about an executive summary. You have the goals. You have the audience. In other words, the niche you're trying to focus on, the market itself, how profitable the market is, the promotion strategies that you have in place. How are you going to advertise your products and services, and budget expenses? So in the numbers section, you have also the financial statements. Okay, so you have projected financial statements. So you have all 4 of them. So you have your projected balance sheet, your projected income statement, your projected cash flow statement, and your projected statement of owner's equity. So, boss, what I'm trying to tell you here is what? Bottom line, show the lender that your business model is sound. Don't just talk. It's, just like, don't like, yeah, I can repay you, whatever. Hey, listen, hey. Show the lender that your business model is sound by using concrete numbers, by articulating your documentation in a clear business plan. And by the way, if you can't write a business plan, please don't you go on the internet and download a cheap ass internet business plan template and show it to the lender. No, I want you to go on Fiverr. I want you to go on TopTal. I want you to go on Upwork. I want you to go on freelancer.com, or even hire someone locally to write a business plan for you. Okay, no cheap ass template from the internet. Not at all. You don't download anything and just customize it to say, to make sure that it actually fits your company. No. So the second question they ask you is your business legit? By the way, boss, welcome back to the channel. We're having a conversation today about startup business loans, no revenue, no personal guarantee, big amounts. What are the top 5 questions that the lender is going to ask you before approving your loan amount? Okay, so is your business legit? Let me ask you, boss. So you have a business, you're all, telling everybody in the neighborhood, I have a business, I'm chilling, I'm a CEO, whatever. But does your business actually rely on solid foundation? So how does the lender find out if your business is legit? Well, they start by doing something very simple. They do a Google search. Oh yeah. You listen, the whole thing is that if you're not referenced on the internet, if you say that you have a startup and you have no online presence, that's bad. That's really bad. That's why we tell all our business clients, very first thing you need to do is to have a website. Because the lender is going to do a Google search first, and then they are going to check your website, your company's website. They will look at things like the web page itself. Okay, they'll look for things like what kind of a protocol are you using for your website. Okay, and then the lender is going to check the Better Business Bureau. If you have a profile on the platform, on the BBB platform, okay, and then so that's basically the base. That's the primary search. Now the lender is going to start digging a little deeper here. They will ask you things like your EIN, your employer identification number. They will actually see if you have a physical address for your business or if you were just working from home. There's nothing wrong with that though. But I'm trying to make sure that the lender wants to make sure that you have a clear segregation between your personal affairs and your business's affairs. Okay. They will actually ask you, for example, to actually show them your business bank account statement. Okay, and the lender was also pay attention to things that are really important depending on the niche that you're in. So depending on the niche you're in, they'll ask for licenses and permits, because some industries are heavily regulated than others. So lenders want to make sure that if you are in an industry that is heavily regulated, that you actually abide by all the rules and regulations that the federal and the state authorities have put in place to make sure that everything goes fine. So boss, what I'm telling you here is what? Make sure that your business is legit. Make sure that business is legit. Also think about having a registered agent service. Okay, think about making sure you have your articles of organization or incorporation, depending on the business type that you have. So those are quintessential elements that you have to have in place before you actually can get a big startup business loan with no revenue, no personal guarantee, and a large amount. The third question that the lender is going to ask you, what do the projected financials look like? By the way, boss, I just want to quickly remind you of today's conversation. The topic of today is what? Startup business loan, no revenue, no personal guarantee, large amount. 5 essential questions lender always asks before approving you with a giant loan amount. So what do the projected financials look like? This is an important question. See, the whole thing here is that you have a startup, so you don't have actual data, actual financial data. So anything you have is projected, is estimated. So basically, the lender wants to pay attention to the accuracy, or at least they want to make sure that the numbers that you are showing in the projected financial statements, those numbers make sense. See, the whole thing is, I don't want you to just make up numbers, go around and just making up numbers or whatever. No, if you make up numbers, the thing is that your credibility will go down. Your level of credibility will go down, which is why, going back to what I said earlier about the business plan, if you have no idea of what I'm talking about, when I mention things like projected financial statements, when I mention things like balance sheet, cash flow statements, when I mention things like income statement, when I mention things like a statement of owner's equity, when I mention those things, if you have no idea what I'm talking about, boss, that means this is not your field. It means you need to enlist the help of a professional, somebody who has a clear idea of what I'm talking about, because what I'm talking about is what the lender is talking about, and you want to make sure that you have the proper help. And please, again, you can hire somebody locally depending on your resources, or you can go online and hire someone to prepare projected financial statements for you. The lender just wants to make sure that your business, going back to what I said earlier, that your business is viable. Okay, but please, when we talk about projected financial statements, we're not speaking about just making up numbers. Those assumptions that you use to prepare your projections, those assumptions must make sense. In other words, they must be grounded in reality. Okay, so for example, you can't be like, I'm gonna double my sales every year. Hey. No, don't be so optimistic, because this is not true. You cannot physically double your sales every year, unless you're kind of like, some kind of MLM, multi-level marketing scheme, and nobody wants that anywhere, or Ponzi scheme, whatever. So please be realistic here. Very important. Question number 4, the lender will ask you, does the business have assets? See, the thing here is that, you have a startup. Yeah, you're a brand new business, but that brand new business didn't come out of thin air. Somebody has to create it. You or your co-founders, right? And chances are you probably have put into the business something called seed money, so the initial money. And to actually make your business viable, or at least operate normally, you would have to buy certain things, certain basic things, okay? And so you have to probably buy some computers or some kind of light office equipment. So those elements constitute your business assets, okay? And when the lender asks the question about, does the business have assets, the lender really cares about the viability of your business, but also the viability of the individuals behind the business. See, the whole thing is when we talk about startup business loans, the lender is actually interested in two things. That's what we call the duality of analysis. So the lender wants to make sure the business itself, the startup business, is viable, but also the people behind those behind the business are viable too. I mean, viable in the sense that they are financially stable. Okay, so when we talk about does the business have assets, there are several categories of assets within a business. So you have short-term assets, and you have long-term assets, and you also have intangible assets. So within short-term and long-term assets, you have tangible assets. In other words, physical, material, and financial resources of your business. Those are tangible, things you can touch. Okay, and intangible assets are resources without material substance, but with clear business value. For example, your patent, your copyrights, your goodwill. Okay. Now, if you have a startup, you don't have goodwill. You only have goodwill when you actually buy another company. But that's another topic for another day. But one thing I want to say here is that when we talk about examples of current assets, so current, by the way, in accounting and financial reporting, when we use the term current, we're speaking about an asset you can sell or monetize within 1 year. And when we talk about long-term assets or fixed assets, we're speaking about assets that have a monetizable value that goes beyond 1 year. So 1 year is really the threshold in accounting and financial reporting. So example of current assets include cash and cash equivalents, receivables, deposit accounts, money orders. We have marketable securities, inventory, stock, prepaid expenses. And in terms of fixed assets, we have property, plant, equipment, tools and machinery, furniture, investment, long term. So here you have it. Question number 5. What are the founders' financials? By the way, just want to quickly remind everybody of today's topic. We're speaking about startup business loan, no revenue, no personal guarantee, big amount, and I'm actually acquainting you with 5 quintessential questions that lenders always ask before approving giant loan amounts. So basically, what are the founders' financial? So when the lender asks this question, when the lender is inquiring about the founder's financials, they are interested in 2 things, only 2. They look at the founder's credit score, and they want to have a clear idea about the founder's personal financial statements. So basically, and in some cases, in some rare cases, if they have to approve 6 digits, they will want to see multiple years of tax returns. Okay, so credit score is pretty easy. I mean, where are you? You are the sponsor of this startup. Okay, where are you on the FICO spectrum? Really, talk to me about that. Are you in the 600? Are you in the 500s? Are you in the 700s? Are you in the 800s? Where are you exactly? So the lender wants to know. Now, I'm not saying that your personal FICO score will influence the underwriting decision, but it will actually play an important role. Okay, it's one of the many criteria the lender will pay attention to. After all those questions, they will also pay attention to your FICO score, and your FICO score or your Vantage score 3.0. One thing I also want to say is that when we speak about your personal financial statements, basically, the financial statement is a document or a spreadsheet that outlines an individual's financial position at any given point in time. So the statement typically includes general information about the individual, such as name and address, and along with a breakdown of total assets and liabilities. And the statement can help individuals track their financial goals and wealth, and can be used to apply for many things. And one thing I want to say is that when we speak about a personal financial statements, so that's kind of close to a balance sheet, but you also need to have income statement information. In other words, the lender wants to know what kind of revenue the individual himself or herself is actually drawing from business or professional activities. So this is really important. And in some cases, based on our experience, the lender might ask for a cash flow statement. And also, along with that, as I said, tax returns for the last maybe 3 to 5 years. So your 1040, along with very detailed Schedule C information. And let me give you a few pro tips here. And so those are the 5 questions that I just that you need to keep in mind. But I want to give you a few pro tips. The whole thing is, if you are trying to get a startup business loan, no revenue, no personal guarantee, and a high loan amount, you need to decide why you need financing in the first place. Because having a clear idea about the kind of financing you need will help you a lot. Being directed to the right lender. And this is really important if you want to improve your approval odds. Okay, so you can actually you can need financing for your startup to buy new equipment, borrow a small amount of money, establish a business, pay for day-to-day operations, or borrow money on a as needed basis. Okay, and you want to also check your eligibility. So after determining why you need financing in the first place, check your eligibility. Things like credit score, collateral, and or personal guarantee, time in business, annual revenue, those are really important. And you want to constantly compare and contrast business lending options. See, the thing is, when you're a startup, you're not limited to one particular avenue when it comes to seeking business funding. I mean, you have a constellation of places where you could just go and ask for funding. And we love the fact that you can actually get funding from online lenders. For example, you have Toro Capital, which lends to startups, no problem. You have SmartBase in some occasions. You also have Kalamata Capital Group. In some occasions, they can actually lend to startups, not a problem. You have traditional banks also that can actually lend to you. But when it comes to traditional banks, you want to actually start with a bank where you have a relationship at, because it's a lot easier. They have all the paperwork they need from you, and they are more willing to look into your file, even if you don't have a business experience. If you don't have a lengthy operational history, they can still look into your file and approve you. And also, you might want to consider credit unions. So we actually lump credit unions in the same categories as the traditional banks, okay? And don't also forget to include micro lenders. So micro lenders such as Kiva, for example, help you actually get a startup business loan, no revenue, no personal guarantee, and even better, they don't ask for a personal credit score. But I mean, Kiva has a different credit scoring model, but it is what it is. And on top of that, remember that micro loans are capped at the $50,000. Okay, if you qualify. So if you are looking for a larger loan amount, you don't want to go the micro lender route. Let me give you, if you have actually been following us until this point, I want to give you a bonus here. And so if you want to boost your chances of always receiving approval for your startup business loan, no revenue, no personal guarantee, and a large loan amount, please, you want to gather the required documentation before you even apply. So basically, you have to think about personal and business tax returns, okay, business licenses. Make sure that you have the right articles, whether it is articles of organization or articles of incorporation, depending on the type of legal structure that you have. Whether you have, let's say, a C corporation, an S corporation, an LLP, an LLC, and whatnot. This is really important. And think about the personal and business bank statements. Don't forget about your registered agent service, and think about your profit and loss statements, your financial statements in general here. And when we talk about financial statements, we're not just talking about the actual 4 accounting reports. We're also talking about the notes to the financial statements. In other words, the disclosures. Those are an integral part of the financial statements, okay, according to US GAAP, generally accepted accounting principle in the United States. And you also think about your business plan. Okay, this is a quintessential element also in your arsenal that will help you actually get a business loan, or you start a business loan real quick. Think about the building lease. If you have a lease agreement, you want to show that also. And one thing I want you to do here is that you want to submit your application, okay? And you want to submit the application and make sure that you have your business name, your own name, your social security number, your EIN, your desired loan amount, the loan purpose, the annual revenue. So here you don't have actual data, so you need to actually put forecasted data in terms of annual revenue. One thing I also want to say here, and I've said this before, when we talk about submitting the application, if you choose to go with the bank or credit union, it's just better to go to the actual branch to sit down with someone before actually hitting the submit button. That way you're not really risking your FICO score for nothing, Okay, you want to explain the context of your loan. You want to give a rep the opportunity to ask all the questions that he or she wants before approving you. And it's so important to actually be prepared. Okay, but the bottom line here is what? After you submit the application, just wait. They'll get back to you. It might take a few days. It might take a few. It depends. I mean, online lenders are faster, but traditional lenders, such as banks and credit unions, they are slower. So it might take from 1 day to 7 days to actually receive some information from the institution, from the lending institution. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about startup business loan, no revenue, no personal guarantee, a large amount, the 5 questions that lenders always ask before approving you. Number 1, is your business model sound? Number 2, is your business legit? Number 3, what do the projected financials look like? Number 4, does the business have assets? Number 5, what are the founders' financials? And I give you a few pro tips and some bonus info. Thank you so much for your attention. God bless you. I will see you next time. But until then, remember, stay marvelous.